Hi there and welcome to Money Talks, where we take a look at the rural economy as it affects you in the ag sector. In this edition, all eyes are in Washington as the government prints new money, and plenty of it, to kickstart the stagnating U.S. economy. What's it mean for us here in New Zealand? Our economy creeps into its second year of recovery thanks to strong export demand, with Zespri cashing in on a China sales boom. How good is it for our kiwi fruit forecast? And Fonterra kicks its China strategy up a notch, doing the deal to develop a secondary farm in China. How many more does CEO Andrew Ferrier fancy? All this and much, much more coming up. But first, the inside oil on the state of our rural economy. Meet the man who's taken the October pulse and written a big report to prove it. Here to tell us all about it is ASB rural economist James Shortall, starting, of course, with the latest results from the global dairy trade auction overnight. James, good to see ya.
Good to be here.
Now, how do we do on that auction?
Overnight, there was no change to prices, so prices were completely flat. There were some changes with the different commodity products, and anhydrous milk fat was up reasonably strongly, and buttermilk powder and skim milk powder were slightly down, but whole milk powder was unchanged. So I think it's a really positive result, the fact that prices are fairly stable and remain at, relatively speaking, they're historically really high, so it's good news. Okay,
let's talk about your big impressive October report now, and we talk about dairy prices on the global market. Still a lot of volatility. What do you see moving forward?
Well, it's hard to say that there's not going to be further volatility because we've seen so much over the past 2 years. It's been quite good, I think, for probably the last 8 weeks where prices have stayed relatively steady, and that's come through a time when we've seen big revisions to the global and regional economic outlook over the next year or two.
Yeah, James, downward revisions. Talk to me about that.
Yeah, well, I think when we're looking forward to into next year, then things are looking a lot softer, and we've probably always been. We've always forecast that we're going to have a slow recovery out of this financial crisis. Financial crises generally do take a lot longer to recover from, and that is what we are seeing now. But of course, we came through a reasonably strong period through the end of last year, perhaps through the beginning of this year, and we have just tapered off now. And it's taken us a little while to realise that it's going to be a bit of a slow grind out of this.
Now, tell me, do you think that the demand from China is going to remain the golden ticket?
I think so. I mean, our regional, our proximity to Australia and to China and to other Asian nations has been really, really important to New Zealand's economic recovery, and the fact that we are, even though we are growing fairly slowly, the fact that we're able to export to those areas that are really growing quite strongly has been positive for us.
Now, apparently Chinese dairy companies are looking for something like $900 million. What's that all about, James?
Well, I think I think that's a really good story for the dairy sector. Dairy demand into the Chinese market is really strong, and I think it's going to continue. And some of these companies are looking for additional capital so that they can go out and target some of those industries. There's 3 different companies that are looking for money. They're looking to raise money on the Hong Kong Stock Exchange by floating some of the equity. So I think this is big business, and they're looking to expand, and there's potential for New Zealand to be part of that.
And more demand coming also from the oil-producing countries. Tell me more.
Yeah, I think there's a couple of good factors going for the dairy industry. We have been concentrating. Well, we've been exporting a lot of product to the likes of China. They're increasing their economic growth, and they're going to be a good source of demand for our products for a time to come. Then you consider what's happening with the Middle East. There's a lot of dairy products heading to the Middle East. Europe's typically been a big supplier of product into the Middle East. Now we are becoming more and more important.
Okay, let's move to lamb. The weak pound, of course, is still hurting our sheep farmers.
Yeah, well, I mean, international prices are very, very strong out of the UK market, and there's a couple of factors that are going on there. I mean, when you consider what the UK is going through in terms of their economy, they're going through some pretty big structural changes. The government's just recently announced that they're going to cut 500,000 jobs in the public sector. It's that's going to have an effect on their economy. But international prices are really strong, and it all comes back to supply. Supply globally is down with the weak pound. Then more UK producers and processors are sending lamb across their water to the EU continent. So it's all positive for us in New Zealand. I think international prices are going to stay strong right through this year, even though the pound is going to cause some problems, and there should be some benefits for farmers here.
And the US imported beef market continues to just rocket market ahead. That's got to be good news.
Well, exactly. I think that's a supply story again. Demand is still fairly soft in the US market, but imported prices are really strong, and the outlook is for them to remain strong. Even though the dollar's high, then scheduled prices are still better than what they were this time last year.
So talk to me about the New Zealand average beef price. What are we looking at? Yeah,
we're looking a little bit higher than what we were last year, and typically through this time of the year, then we would start to see scheduled prices start to ease off. But we are ahead of what we were about this time last year, and really I'm picking for us to see that seasonal decline, but to stay higher than what prices were received last season. So.
And terrific news for wool prices. I mean, just going for gold up on the 2-year average, way up.
Yeah, I mean, wool has just been storming ahead the last couple of months, and even overnight, when we talked a little bit about cotton prices, they have skyrocketed. They, prior to the last trading session, they were up 71% on the US market. They increased by their maximum limit. They're now at the highest price they've ever been in 140 years of trading.
Never say never, could go higher.
That's right, and the outlook is looking really strong. There's been some concerns about production in the major producing areas, and demand is still really strong. So I think the other positive factor for cotton and, of course, for wool is that, December 2011 futures prices, and they're still sitting at around $1 US per pound. So on a historic basis, that's very, very high, and that would indicate that people are, sort of a little bit worried about where supply is going. They're seeing the market really strong, and I think that's going to be it's going to underpin the wool market here in New Zealand.
Thanks, James. After the break, is a global recovery running out of puff? In the United States, they're cranking up the money machine to print billions of new dollar bills. Will it work? And American Secretary of State Hillary Clinton hits town. Will she announce those top-level talks that could ultimately be worth big bucks for New Zealanders? Could we cash in on a free trade deal like the Aussies have, injecting billions of dollars into our economy? And Fonterra does a deal in China to develop a second farm. What's the $42 million investment likely to do to quench the thirst of local demand? Plus, much, much more. But first, answer this in our Farmers' Facts and Figures quiz. And it's good news. What percentage have New Zealand wool prices increased on the 2-year average? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage have New Zealand wool prices increased on the 2-year average? The answer? Wool prices are up almost 42%. That's according to ASB's latest Rural Economic Report. Well done, James. Wish we could report similar good news for the global economic recovery, but the reality is it's looking like a long, hard grind back to prosperity. Joining us now is Spicer's senior financial advisor, Jeff Matthews, with his take on the U.S. Federal Reserve's huge round of money printing about to launch of anywhere from $500 billion US dollars to $1 trillion US dollars. Jeff, what's that going to do to global currency markets?
Well, most economists are actually not in favour of the stimulus package. They don't think it's necessary. I mean, the idea is it's going to drive down interest rates, and interest rates are at record low levels. So, where's the value add? You can go out in the States now and get a 30-year fixed-rate mortgage at 4.3. So even if you could lower mortgage rates another 0.5%, it's really not going to help the housing market. So most economists are actually against the stimulus package. It just seems like the Federal Reserve's run out of options at the moment as to what to do to help stimulate the economy. Sometimes if a person comes out of, serious, say they have a serious health issue and they come out of hospital, they're on the recovery, you just have to, it just takes time. You can't try and speed up the process.
So you're saying they shouldn't stimulate at all? They should just keep the money in the printer?
It's not, people are saying, well, what did the last stimulus package do? I mean, you can't actually define the benefits. You bailed out the banks, you bailed out the car companies, they're all on the way to recovery. Sometimes you just need to step back and less is more.
Okay, we'll talk about that. James, do you agree with that take?
I mean, I think the point is to try and drive the interest rates down, and as Jeff said, they're at very, very low levels. So you have to wonder what the what it's actually going to do. I guess in other ways, for the effect on us here in New Zealand is that by driving down their interest rates, our interest rates are going to be a little bit higher. So it means that more people are going to be coming to New Zealand to invest money. It might put our currency higher. The US dollar would become weaker, so it's going to have some effects on us. But of course, it'll make the US dollar a little bit softer, and it will help their exporting sector. So there might be some benefits out of that. But in terms of interest rates, then it's not going to stimulate a whole lot of people to go out and buy new houses.
And talking about interest rates, look across the ditch. Australia, a Commonwealth Bank has now doubled their interest rate. What do you make of that?
Yeah, it's an interesting call. I mean, the Reserve Bank of Australia put their overnight cash rate up on Tuesday afternoon by 25 basis points, and the effect on their currency, interestingly enough, is it went back through parity, so it was well over, trading at over $1 against the US. But it's an interesting call to put your interest rates up by more than the cash rate. So
by double, almost double.
I would expect to see some political banter coming about.
And Jeff, the irony is, of course, that CBA is run by Ralph Norris, one of our, probably our biggest corporate high flyer anywhere in the world. He just made 20 million Australian dollars, apparently. So he's taken home a huge pay packet, and all the little guys are going to have to pay more on their mortgages. What do you make of that?
I'd like to be in Ralph Norris's shoes. Look, there's no easy answer. I mean, the Australian economy, they have to get ahead of the curve as far as inflation. So I think they've done the right thing. I mean, the Aussie economy just continues to go gangbusters, and the danger is that they leave it too long to raise interest rates. I mean, I've got a brother who's working over in Western Australia at the moment, and even in the mines, you can get people who might have been working in a sandwich bar a year or two ago. They get a heavy-duty licence, and they're earning $100,000, $110,000 driving trucks in a mining company. It's inflationary. And then you've got a dollar, you've got a dollar for dollar against the US, which is great for the mining sector. But in 2 or 3 years' time, I mean, it's going to kill tourism. It's going to kill exports for agricultural products at $1. So I mean, yeah, I mean, make hay while the sun shines. But I see problems down the track for Australia, and it's too one-dimensional. I mean, as far as it's just the mining sector that's going to benefit. Manufacturing's going to do it tough. Farm exports are going to do it tough at a dollar for dollar.
Okay, let's quickly go back to the United States, because you're one of the few guys who thinks that the Americans actually are coming to grips with some of their problems, that some of the sectors are doing quite well. Car companies, for example.
If you look at, last week, 65% of the top 500 companies have reported their September reports. Over 85% of them have beaten or met their earnings estimate. On average, the profits are up 30% from the same period a year ago. So at the corporate level, tons and tons of profit. What they're doing is they're not actually employing people, they're sitting with cash. So last week, Ford Motor Company, which didn't need bailout money, they made $1.7 billion for the last 3 months. They put $3.5 billion into their employees' health trust. They paid a couple of $2 billion back to the banks, and they're sitting on $20 billion in cash. Apple came in with some great results. They're sitting on $51 billion of cash, looking for what to do next. So companies are in reasonably, they've got very low levels of debt, they've got high amounts of cash, but they're not actually putting that cash to use at the moment. That's the problem.
Okay.